Ladies and gentlemen, good evening. If you're listening to this, you are here for a reason, and that is because you are thinking outside of the box of the mainstream media, the mainstream financial press. However, you are looking for some real-world confirmation for your beliefs, and that is the purpose of this channel. There are many people out there discussing fundamentals regarding the precious metals, excessive debt levels in the United States, negative interest rates around the world, bailouts, wars, and rumors of wars. Yes. But, ironically, that has not stopped the price of gold and silver from falling from 2011 to 2015. And the purpose of this channel is to show you, in no uncertain terms, what is actually happening in the prices of the metals themselves. As we look at gold first. Now this looks like an impressive little spike in the late afternoon hours, except we're looking at a $2 per line y-axis. Here, this is actually negligible price movement, basically consolidation here. When we start to see a spike like this, and we're talking 10 or 20 or $50 lines on the y-axis, which will happen within the next 2 years, that is my prediction, then we will make more of an emphasis on this kind of price action. Right now, this is still consolidation for the gold market. Silver market consolidating as well, showing some relative weakness to gold, i.e. not making a higher high on this most recent move, which gold just has. So a slight deterioration in the gold to silver ratio in favor of gold. Let's put this all into perspective. Bring up the gold chart here. We're looking at the 18-month time frame. This is so important, what is happening right now. This is one of the clearest consolidation patterns that I have ever observed in studying the gold market. I have been participating in the gold market for over 10 years. However, I have studied with rigor time periods going back well into the 1970s. And I'll tell you, this is one of the clearest consolidation patterns that I have ever seen. We were talking about this. We're calling this a major low here in December of 2015. An impulsive rise higher, $330 rise higher over the course of 6 months, followed by a major retracement to 1120, followed by a nice surge higher and a bit of a grind that is going on right now. Why is this so important? Let's back this out for just a moment. Let's look. We were just talking about the red highlighted area. Focus on this. Let's move this out of the way. Focus on it. The upper resistance boundary that we are talking about is nothing less than the long-term downtrend from 2011. How many hits on this line? At minimum, 1, 2, 3, 4, 5, 6, 7, 8, and a 9th hit happening right now. So this is one of the clearest technical battles that I've ever seen as a technical-based analyst. This is going to be a significant breakout when it does happen. However, I'm not here to tell you that because of the war in Afghanistan, which is ongoing, or because of X, Y, or Z political scandal happening in the world, that gold is going to move higher. I'm here to show you what is actually happening in the gold market here and now. So this consolidation is happening. We see these hits. It's like gold is trying to move higher and these sellers keep coming in. Of course, this is all happening. Critical component. This downtrend here is happening above the 1980 former all-time high. So you had a multi-decade consolidation, a break higher, coming down to this level, and you were attempting to break higher. It hasn't happened yet. Let's zoom it back in. What do I expect? from someone who approaches this from a technical standpoint, what do I expect for the gold market? I hate to say it, but I expect more consolidation. It looks like the gold market has topped right here over the short run, just above 1270. And it looks like it is going to enter the seasonal weakest period. June is the weakest month of the year seasonally for gold, going back for 40 years. So we are looking at that right now. My expectation is that gold would back off for the next month or two and form some sort of a consolidating low here in late June or early July, perhaps early August. And then the most important battle, if you have only been following the gold market for the last year or 2 years or even 5 years, what is shaping up right now in the middle of the third quarter, and by that I mean anytime basically after August, what is shaping up in the third quarter is going to be a significant move in gold and not only silver, but this will be significant. A triangular consolidation like this roughly has a target equal to the amplitude of the initial impulsive move higher, which was $330. So targets for a breakout of this move would be either, and this is not a range, there was some confusion the previous time that I discussed the gold chart. People thought I was talking about a range. I'm not talking about a range. I'm talking about distinct targets in the gold market of either $1,535 or $875. What I'm saying is when this thing resolves here, it's going to move strongly higher or strongly lower. So what happens in a consolidation here is that people get worn out, and people who were only interested here in the later part of the first half surge in 2016, they become disinterested. Everyone sells, everyone moves on. It becomes very, very quiet. And after a period of quiet, there is some fundamental spark which enters this market and causes either boom or bust. So it's not just going to be a little move that comes in here when this resolves. It is going to be significant. Now, I am largely invested already at this point for a reason, because I'm looking at a lot of leading indicators, gold to silver ratio. I'm looking at gold versus the CRB commodity index. I'm monitoring gold versus the miners. I'm monitoring the Japanese yen to US dollar cross pair. And it looks to me like this is going to, after a period of consolidation here in the early part of the third quarter, it looks like it's going to break higher. I cannot be 100% certain. No one can be. So you want to follow this very closely if you are especially if you're in the leveraged plays. If you are in the accumulation and stacking mode, I would tell you this could work out very well. This could also work out not so well. We would have a lower target coming into the later part of this year. But if you're a stacker and you're in this for the long run, that would actually probably be a good thing for you. We'd be looking at a final flush out here to new lows before the recovery commences late 2018 going forward. Let's look at silver. Silver is looking very nice. I'm very glad to see now all of these lines mean something. If this looks overwhelming, this chart to you, I encourage you to pause this right now. And now we continue. So from the bottom, this is the same bottom as in the gold market, we have a rising linear trend line, which was tested right here in December of 2016. We had another test that failed below that for about 7 trading days. And then the strong move higher above that. You must call that a false breakout. If you monitor trend lines, we've discussed in previous videos how important these trend lines are on a linear basis. If you're monitoring those from an important low, which I believe this is, then this is a false breakdown. And the silver market looks very healthy from my standpoint. Now, this does not mean that silver is going to make a moonshot or whatever other common term is being promoted by the industry that's encouraging you to believe in some hyperbole. What it means is that the technical action in silver is very healthy from a basing perspective. You had a very strong surge. This took out important resistance levels around 1850 that had held for about 12 months prior. You took that out. It did not maintain, yes, but this primary decline from the high has broken, and now silver is basing once again. And thus far, we have a series of higher lows that are forming in the silver market. So, what does it mean? I think that if you have a long-term perspective on the silver market, by that I mean about 2, 3, 4 years, these lows that are forming in here look very healthy. Now, if this rising linear trend line were to break more definitively, let's say, what would I want to see hold to tell me that silver is still attempting to form a new bull market? It's this 1575 level right here, 1575. Please keep that one in mind, 1575, if it were to come to that. If 1575 were to break, I would tell you something has gone wrong with the bull market thesis. And this would mean perhaps closing the leveraged investments, the mining equities. If you're in options, I would suggest closing those options below 1575, taking your partial losses and moving on and waiting. Because if 1575 breaks, silver could move, it's not just that it could move lower. I think it could retest the lows. The nominal low might hold, but what it means is that silver might continue basing for several more years. So it's not always a question that the price is going to move lower in the nominal value. It's that the basing process might continue for a more lengthy amount of time. So 1575, in my mind, is the important level to watch for the bear case. On the contrary, if this holds, I do not expect silver to go to the moon this year, but man, if it bases, especially, let's say, making repeated attempts here at the 1850 to 19 primary resistance, I would say silver is setting up extremely well for a good move when gold finally breaks its primary consolidation that we spent so much time focusing on in the first half of the video. So yes, you have if-then statements, just like in computer science, just like in real life. This is real life. If you are looking for someone to tell you silver is going to $50 this year, have fun. Listen to those people. It has not served most investors correctly to be so one-sided over the last 5 years. I like to show you exactly what is happening, the risks and the rewards as the market shows right now. If you would like to go deeper into this style of research, this goes out. All of the leading signals are going out on a weekly basis to premium subscribers. We also focus on the miners, individual miners, and the premium subscribers will get the first alert if something goes wrong with the technical thesis that I have proposed here in this video. You can find more on the main website. If you have a unique situation and you would like to discuss that with someone who will equally encourage you to pare down your positions if I believe you're overexposed, as well as to help you perhaps diversify if you have too much capital in the miners or too much in one particular miner, I will tell you that in no uncertain terms. I do individual consultations on an hourly basis. You can find more on the website. I do thank you very much for watching this evening. I'll be back this time next week. This is even more important than it seems based on the consolidation. And trust me, I'm in this industry. I'm able to get statistics for the types of reads that are coming from articles and from videos and clicks on the websites. I'm an editor at the Gold Eagle website, and I could just see all around that we are in this consolidation right now, and people are getting worn out. And this is such a fantastic setup for the move that is going to come. It just tries to tire most people out right before it occurs. So please pay attention, please stay tuned, and I thank you for joining me.